Hi guys, happy weekend to you. Sean Duro-Fadipe here, has the wheel, and I'm delighted to come your way again this beautiful Saturday. I hope you're having a beautiful day. So today, what do I want to show you? I want to show you a simple, common sense, yet yet seriously overlooked price action strategy. All right, it's amazing. It's an amazing way to trade, but yet we tend to overlook it a lot of times. Right? Now it uses RSI, and like I say all the time, it's not the number of indicators you have on the chart that increases the quality of the trade. No, in fact, most of the time, I see a lot of people stack up indicators on their chart, clutter their chart with so many indicators, and at the end of the day, you're going to find out that imagine someone stacking up with RSI, with MACD, with RSI, MACD, and stochastic. Now, all three indicators belong to the category of indicators called the oscillators. All right. Now, the oscillators basically do the same thing. All right. They basically do the same thing. So, if you're using three of those on your chart, you're simply cluttering your chart for no just reason, because they don't in any way increase the quality of the trades you're going to take. All right, it's simply doing, every single one is doing the same thing. They're going to show you overbought and oversold, and that's it. All right, that's what they are going to do. Okay, and anything, and they can also be used interchangeably, which means whatever it is you use this one for, you can use the other one for. Okay, so having three of them on your chart is just cluttering your chart. So many charts, there are so many indicators, and guess what happens? It now blocks you from seeing the main thing, which is what really matters. What price is doing on the chart. You really don't see much of that because you have too many indicators cluttering around, just blocking everything. All right. So today, basically, I just want to share with you simple, common sense, yet highly overlooked price action strategy. All right. It uses the RSI. You could use the RSI. You could use the stochastic if you want, or the MACD. All right. The information we want to get is want to know when the price is overbought, and we want to know when price is oversold. Okay. Now that's the first thing. It's the first thing we want to look out for. Now RSI can be used. Okay, this is RSI 6. No, the RSI has to be default. Default is 14. Okay, so we use the default RSI, make it 14. And of course, okay, I'm going to change this color just so that it pops. All right, it's better when it pops because you see clearly. So I'm going to leave it at yellow. Okay, fine. So now what you want to do is wait and check when price it's at overbought and when it's at oversold. All right, and we're going to use the good old RSI. Like I said, you can decide to use the stochastic. You can use the MACD if you want, but we are using the RSI and we're leaving it at default. 30, level 30, and level 70. Level 70 is the overbought level, and level 30 is the oversold level. All right. So what do you want to do? Well, this is what we would do. Of course, this can also give you very good results, especially if you understand generally how the market works. Okay, if you understand how the market works, then you know how to combine one or two other concepts to even have sharper entry signal. Okay, but I'm going to show you just two things you need to combine this one to have a good level of results. Of course, it can get better if you add other concepts to it. You can even have a sharper signal. Okay, again, adding too many indicators to your chart doesn't necessarily increase the quality of the trade you take, especially if the indicators belong to the same category. Then it means they are measuring simply the same thing. All right, so I have the RSI already attached to this chart, and it's RSI 14, and we have it at default level. Okay, so I'm going to go to H1. And what am I going to do on H1? I want to look out for the overbought and oversold zones. So I take this. Let's take it from the most recent one, which is here. Market got oversold right here, right? Now it's oversold here, but that's obviously not all you need to look out for. Remember I said it's just the first thing. Now once you see this, the next thing you want to do is now drop down to maybe 15 minutes. Okay, and when you do that, then you want to spot. Now let me go back. On H1 we have seen an oversold, price has oversold. Now what does that tell us? It tells us that price is going to buy anytime soon, that we're about to get into a buy, but we are not sure when. Okay, note that RSI can be at oversold for some time, so you really don't know how soon it's actually going to go into that buy, but we know that it's about to go into a buy. All right, so what we are going to do to have a very good entry is we're now going to drop to M15. This is so simple, it's so basic, and it's highly overlooked. Okay, guys, things don't have to be complicated for it to work. Things don't have to be complicated. All right, a lot of people probably know this about the share, but they overlook it because it looks too simple. We tend to think that things have to be really, really complicated for them to work. But no, okay, the simplest of things actually work. All right, and this is an example of a simple thing that works. Okay, now this is, so we're dropping down to M15, and here is that line. Now what we are going to be scouting for, we should be scouting for buy strategies. Remember, buy entries. Remember that on 1 hour we already spotted that price has oversold. All right, so it means that it should buy anytime. Okay, so you then drop down to your M15, then start looking for buy signals. Okay, buy opportunity. Now here, how do you confirm your buy opportunity? That's where your candle of the candlestick patterns come into play. All right, that's why your knowledge of the candlestick patterns comes into play. All right, so what you want to look out for first is you want to then look out for a pattern that suggests, that confirms. Remember, H1 already suggests that we're about to go into a buy. Okay, so you're coming to M15 to actually confirm, to make an entry. All right, so you want to confirm that entry. Now, so you are not making that buy immediately, right? You're waiting for candlestick patterns, price action that will confirm that price has started buying. Okay, now the market has started buying. Okay, now look at this. Shortly after we got this, then we now start looking at what the market is doing, and just here we got a rejection. As you can see on this candle, we have a bullish pin bar right here, right? This is a bullish pin bar. All right, what some people will call shooting star. Well, yeah, the name doesn't even matter. What you need to know is what the candle stands for. All right, now what we have here, we've gotten a rejection, which means lower prices have been rejected. It's an indication that the buy, which we were anticipating on H1, is about to start. Okay, so after this, we got this rejection, and boom, started buying. Okay, now if you're going to enter this buy, I'm going to enter this buy after this confirmation, after this candle formation. This candle has given me a rejection, and it has formed a bullish pin bar, which is a confirmation that is also about to go into a buy, and is also happening at a support zone. Okay, it's happening at a support zone, right? Which means that it's happening at a key level. Okay, now I expect it to go into a buy. So if I decide to buy this, where do I take my profit? Okay, because that's important. Your trading strategy should include a very clear-cut take profit level, a very clear-cut stop loss level. All right, those are key, very important, very, very important. So on this one, I'm going to expect that it buys to this level. Here will be my local high. Right, so I'm going to expect this to buy to this level. This will probably be my first take profit recommendation. This is my recommendation, first take profit, and the second one will be the swing high. and here is the swing high. Okay, so he actually started buying, so you could have entered this trade right from here, from this point, okay, then up until here, the first take profit level. All right, that's it. Then it went ahead to hit even the second take profit level, which is the swing high. Okay, so here would be your potential take profit 1, and here is take profit 2. So you can decide to take partial profit at this point, then leave it to run up until this point, then you take the rest of the profit. Okay, I hope that makes sense, guys. Let's spot other setups. Okay, let me delete this. I hope that makes sense to you. It's quite simple, and you can see that things don't have to really be complicated before you can profit. Another thing you want to consider is that a few other concepts that you might want to add to it to make it sharper, to fine-tune it. All right, I'm not going to go into that details here, but basically what I've shown you here is how you can use your overbought and oversold plus price action on the main chart to make an entry. Okay, so if you want it to be sharper, you want higher probability, then you may need to combine a few other concepts to it that will give you better few other concepts to it that will give you even sharper signals. Okay, now let's try to spot some other ones. I'm going to go back to H1, right, and look for, okay, so should we say that, okay, so should we just say that this is an overbought zone? Okay, so that's overbought, right? Let's take that for overbought. Okay, then go to your 15 minutes. Now that's 15 minutes. Okay, remember that on this one, what do you need to confirm? It's at overbought, right? And because it's at overbought, we expect it to start selling anytime. All right, so what you want to spot here, you want to come here to scout for sell opportunities. Okay, how do you do that? You can see clearly now that we have a bearish candle here. We went into and started buying. Okay, remember, you need to look out for a bearish pattern. That's what you want to look out for. And here we have it. What do we have here? Clearly you can see that we have a tweezer top here, right? There's a tweezer top. That's what we have there. And the tweezer top is an indication the market is about to move downwards. Okay, so we could have made this entry immediately. This candle closed here, and that's going to be here. Yes, there was a pullback. You could have done this here, but most of the time my recommendation will be to use the bullish ones, the bullish engulfing candles. They usually even give you more. The drawdown is very much minimal. Okay, but even if you use this tweezer top, we had a slight pullback. Okay, but eventually started selling. Okay, but if you actually use this bearish engulfing, then you could have entered the trade from here, pulled back a little, and where your take profit will be here, right? That's your local low, right? And your swing low will be here. Okay, so you can actually use your swing low will be there. So you can actually then use. So once you make an entry here, from here, you can enter a sell and let it run up until this point. All right. So this point, can you see this point? What we have here, this is support. As you can see, there is support around here because you're seeing rejection, we're seeing rejection, we're seeing rejection. Here is a flip zone where resistance, where initial support became resistance, and here this support. So we know this is a key level. So we are going to use this point as a take profit. So after this bearish engulfing candle, could enter this trade. There's a consolidator for a bit here, and eventually came all the way to your take profit. And if your stop loss should be the top of this candle. All right, sorry, the eye of this candle. That's where your stop loss should be. And you realize that you never got to that point before you finally get into the direction, before it finally gave you what you wanted. Right. So go back to H1. Go back to H1. Let's delete this. Let's delete this one. Let's put one more, then we'll be done. Remember, there are ways to even ensure, and there are ways to time your entry and make it even sharper. Okay, so that the drawdown is very minimal. Okay. So let's delete this. So we're going to take one more example. Alright, so we're back on 1 hour. So, okay, here we have another overbought here. Sorry, oversold here. Okay, now when you have this, remember that you are supposed to drop down to 10 minutes to now go and look for your entry. Okay, so let's try to look for an entry. We expect it to buy. That's oversold, right? So we expect to buy. So we should be here looking for the buy signal. Okay, now if I wanted to trade this, now look at this. This is why the knowledge of the candlestick matter. All right, now look at this, guys. Look at this. Now I'm going to, this has given me an inside bar. Remember what I want to see? I want to see a buying pattern, a bullish pattern. That's what I want to see. Now what I'm going to wait for here is, okay, I've not seen, there's been a rejection here, but finally here we got an inside bar. This is called an inside bar. It's usually an indication of consolidation. Okay, and this consolidation you're seeing here obviously is what is confirming to us what is happening here. Can you see it? This sideways movement. Okay, so that is what this candle is representing. That's why this candle is within the range of this previous one. Can you see that it's within the range, which is an indication of consolidation? Okay, so to trade this inside bar, you can refer to my video on inside bar. You understand what I'm talking about here. This is called the mother bar, and this is called the inside bar. Okay, so if you wanted to trade this, you will wait for the breakout of this inside bar. So in this case, this is the top, right? That's the high, and this is the low. So we want to wait for this, a bullish candle, to break out of this range, the range of this mother bar. Okay, so if you broke out of this range, then you could have entered for a buy right here. Okay, then of course this is your local high. As you can see, this is your local high, so you could take that trade up until here, because that's your local high. So you could have entered this trade and taken it from here to here. Obviously we had a rejection. There should be just before that rejection, so here, somewhere there. So you could have entered this trade when this candle broke out of the mother bar. All right, broke out, then you take it and take profit here. Now this is a 15 minutes candle, so this is nothing less than about at least 20 minutes of trading, 20 minutes of buying, at least 20 minutes of buying. No, more than 20 minutes, maybe 30 minutes of buying here. Okay, that's that. I hope this is making sense, guys. I hope this is making sense. Now you're gonna have drawdown sometimes. That's inevitable. All right, but then you can make your entries even sharper by using other concepts to fine-tune. You can fine-tune your entry based on other concepts. Some of those concepts are being taught in the inner circle, but then even without those ones, you really can use this. Just that you can have those drawdowns sometimes and all that. But with those other concepts, you can actually fine-tune and time those entries so that drawdown is brought to the very barest minimum. Okay. Now, and when you're using this, of course, risk management is important. No matter how sharp your trade entries or your trade entry rules are, if the money management is not good enough, it's just only a matter of time before you lose, before you blow the account. Okay. So you want to look for here we have another oversold. So here we have oversold, right? Now I'm going to drop down to 15 minutes and I'll be scouting for buy opportunity. Okay, good. Now look at this. We have not gotten any buy opportunity here, right? We didn't get any buy opportunity here. But finally here we got a buy opportunity because this gave us, finally here, this one, we got a buy opportunity on this one because here we are now having a bullish pin bar. All right. Now this bullish pin bar that we have here, you could make your entry from this bullish pin bar, of course, and take it to this local. This is your local high. So you can take it to this local high. So you could enter this trade from here, right? You know, there's been a rejection of lower prices, and now we have a bullish pin bar, which is an indication that price is about to buy. So you could enter this trade right here and buy up until here. Remember, this is a 15 minutes chart, so it means that you have 1, 2, 3, 4, 5, 6, 15 minutes, 30, 45, 1 hour, 1 hour 15 minutes, 1 hour 30 minutes, 1 hour 45 minutes, 1 hour, no, 2 hours, 2 hours 15 minutes, 2 hours 30 minutes, and 2 hours 45 minutes. So this went on for about 3 hours. So if you enter this trade, you could have held on to this trade for 3 good hours. All right. I hope that makes sense again. All right. I think that will be all. Let's just sport. Let's sport. Let's try to sport more. And this is going to be the final one. Okay. So look at this. We have a bearish. We have price eating overbought there. Okay, so we are going to move to 15 minutes and look, and we expect it to sell because it has gotten to overbought. Okay, so we'll move to 15 minutes and look for sell opportunity. Now here is where the market overbought there. Now look at this. We got a bearish engulfing candle. Yeah. Now after this, we got this bearish engulfing candle. You see the rejection at the top? Then it finally engulfed the previous one, which is an indication that it's about to go into a sell. And so you would have made this trade just after this level. After the formation of this, you would have entered right there. Yes, we have a pullback. This is what I'm talking about, that with those other concepts I talked about, you can even fine-tune this trade. But even with the pullback, this would have still been a profitable trade because your stop loss wasn't it. Your stop loss should be the top of this one. Stop loss should be the top of this candle, right? This is where your stop loss should be. Okay, so you find out that it didn't even hit the stop loss. He pulled back, he came to retest this zone, right? One of the ways to actually still do this is you can decide to wait for the retest, or sometimes it doesn't retest. So these are some of the other concepts that you can, incorporate and integrate into this so that you can even have sharper signals. So you could then make your trade entry here, okay? After you have this engulfing, make it the moment this one closes, then where will be your take profit? The take profit will be this local low. Okay, here. This is local low. Now the swing low. This is your first take profit. Your second take profit can be at the swing low. But here is your first take profit. Alright, the local low. So if you enter this trade here, you could hold on to this trade and take profit here. Now guys, this is spike trading, right? So you really don't have to go to, because you want to trade spike, and say, I tell people, doesn't matter whether you're trading a trend or you're trading spike, just trade opportunities, okay? But it's difficult to trade like this if you're picking the trades from 1 minute, okay? It's difficult. That's why you need to, it's a lot easier to do it on higher time frame. Now, for me, I won't say I traded spike here. What I did was I was just selling crash. It's not necessarily spike. Well, it might be spike, but because I'm not doing it on 1 minute, it's not looking like a spike to me. I'm not even treating it like a spike, all right? I'm just treating it like, okay, I've gotten a sell opportunity and I'm selling, okay? So you could have sold right here and take it up until this level, all right? I hope that makes sense again. Hope that makes sense. All right, guys. That will be all from me. this beautiful Saturday. I'll see you on the next one. I feel a bit uneasy right now. I think but it's fine. I'll just wrap this up now. Then hopefully I'll come your way again and we'll move into something, another very grand way to trade the market. Thanks a lot for paying attention, and I hope you have a beautiful Saturday. See you on the next one. Cheers.